This is Kerry Artek with Artek Advisory. This is a video supplement that I've now started including for the Monday afternoon AgriTalk show that I've been on now for the last few years, the 5 minutes where, I cover several markets. This week it's December 20 corn, November 20 soybeans, and October 20 live cattle. I recorded this video on Sunday, September 6th, prior to the show itself. I know pretty much what I'm going to say for the show, so it's not a problem recording it ahead of time. Let's jump into corn right now. If you've been watching the video for the last week or two, you know that, or been listening to the show for many months, you'll know that I've got a significant pivot point in the lead contract corn, presently DC20 at 364 and a quarter, which is nothing more than a long-term channel bottom that was projected off, by using the same rate of ascent from the June 8 high and the August 12 high, and you projected off that low, and you can see over the course of several years it held beautifully, sometimes to the very tick. Nice bounce here. About a year and a half ago or so, June of 19, we came off that channel bottom nicely before breaking back and then settling below it. Last March, the middle of March, we closed below this formation, then setting off a long-term sell signal, which played out for a few weeks before we've been locked into this consolidative framework now for many months, 5-6 months now. We have yet to clear back above, push back above, close back above that 364 and a quarter channel bottom, which is now our ceiling of resistance, and it's rising about 1 penny every month. So, in October, it'll be 365 and a quarter. Holding below this formation does allow, I'll use the word allow, I don't have a downward sell signal just yet, but allows the market to fall back to the base of consolidation around 307, 307 and a quarter, which I'll show you in a moment. And if we close above 364 and a quarter, the market has essentially rejected that long-term buy signal. And with that rejection, I generally see, bullish follow through on the heels of that rejection. And I'll get to that in a moment as to what those upward targets will be. But I'm just leaving you with this pivot point, significant pivot point through the rest of the year and even into next spring, below which the market remains weak over that long-term time horizon and above which shows strength. Let's take a look at, I've eliminated that channel bottom, just showing you this is the weekly chart. I'd mentioned that holding below 364 and a quarter will keep the 307 and a quarter area in reach. This is a long-term trend line from the 2014 low against the 16 low that did hold in the lows in April, and it is in reach still over the next, I'm going to say, several months between now and the end of October. I do mention in the show that if we close this week below 350 even, that should accelerate this to within just about 3 to 5 weeks. This 307 and a quarter long-term trend line able to absorb selling through the rest of the year. And once again, it is in reach. You should allow for it. If you are a producer or if you're a long-term hedger, there's nowhere to be but hedged right now fully below 365 and a quarter, as 307 and a quarter is in reach between now and the end of October. Inversely, if we close above 364 and a quarter, that long-term buy signal rejection, as I mentioned, is itself a sign of strength. And so we then have 384 and three quarter within 2 to 3 weeks, 407 and a quarter. I mentioned the low $4 area over the next several months, and this is true. So I think big picture, closing above 364 and a quarter at the end of this week, 407 and a quarter, a 2 to 3 month target. And by spring, summer of next year, I wouldn't be surprised to see the 460s in reach over that time horizon, where we can place a 2021 high. Way ahead of myself there, though. And that's really all I'm going to say for corn right now. Let's jump on to November beans. We did close last week clearly above this 949.5 long-term channel top in the weekly chart, which should spark longer-term bullish continuation. This is a buy signal the beans have elicited that corn has yet to, just an FYI. And the correlation between corn and beans is very rough, not high, not tight. And so we could have a bull market in beans and not one in corn, just so you know. But I do want to say that if this buy signal works, if it does follow through and pushes into the 1140s as I envision over the coming months, I would have to think that corn would also then reject its long-term sell signal in the process. Let's take a look at what these targets would be. Holding above this 949.5 channel top, which I showed you a moment ago in an enlarged format, should yield 991.5 over the next few weeks. I've been mentioning we've got kind of a convergence of a channel top and a long-term descending speed line at 991.5 that's dropping every week. This is an area that I am respecting for those of you who trade the 2 to 3 to 3 to 5 week time horizon. 991.5 on the way up to what I'm considering to be a big picture objective now at 1143 and a quarter. 991.5 can contain September highs, can contain buying into October, and as I've been mentioning, we could from 991.5 fall back to 941.5 and trade inside this zone for a number of weeks. But, big picture, I'm respecting this long-term buy signal above 949.5. I do think that the 1143 and a quarter formation is in reach. I'm going to say 3 to 5, 5 to 8 months, spring, summer of next year, perhaps, on the way up, 991.5, an important milestone to clear. And I'll also say that we've got lots going on in the 1080s. And I think I mentioned 1082 even. That is this high, 1082 half. But, you got 1086, you've got 1080. This area is also one that can contain monthly, possibly a month, 2 or 3 of highs on the way up. But I hate to constantly repeat myself, but I think it bears repeating that holding above 949 even, I do maintain an 1140s long-term target. Whether it's this winter, next spring, or next summer is anybody's guess, really. If this buy signal fails, if we fall back and settle back below 949.5, I do mention in the show that 912 even likely over the next few weeks where we get a nice bounce. But overall, if we close back below 949.5, I mentioned in the show that over the next few months, say by the end of the year, we could quite easily fall back to this longer term support level, this channel bottom at 832 even, which did hold the lows in last April. And it would be in play again over the coming months if we close back below this 949.5 channel top. But until then, all systems go to the upside for lead contract beans. Finally, October live cattle. I've been mentioning on the show for the last month and a half, that we have a buy signal longer term above this long-term speed line at 103.60 this week. It's been dropping a little bit every week. We did test it last week. We came off it on Thursday, Friday, and so we are still above it. 103.60, holding above it, still maintaining a 123 handle objective. 2 to 3 months, 3 to 5 months. Anybody's guess, really, but that's what I'm holding on as our longer-term target. Now, if you subscribe to my live cattle newsletter, you'll get clear accelerator buy signals on the way up, areas that can absorb buying on a 2 to 3 week basis on the way up to 123 handle resistance. So if you're a nearer term trader, if you're looking at the charts, if you're trading the markets with a sort of addressing the time horizon into late September, into October trade, you might want to take up that free trial just so you can see what's going on with regard to those upper resistance areas. But let's talk downside support. 103.60 is really the start of a range of support down to 103.27. There's a lot going on here now in the 103 handle. You have this long-term former trend speed line, but you also have a channel bottom and an ascending 1/3 speed line projected off the April low at 103.27. So I kind of, on the show itself, I just mentioned 103.27 because that is our pivot point, above which we do remain bullish. into later year. This is lead contract analysis, by the way. And so while it reflects the October contract now, when October goes off the boards here in the coming weeks, December is swapped out on this chart, and it will inherit, if you will, these support levels. Holding above 103.27, 123 remains a big picture long-term objective, where I might add the broader live cattle market can top out into next spring and possibly well into next year. And that is this channel structure here. Let's talk about the possibility, and I'll close with this. If we settle this week, Friday, below 103.27 October live cattle, the market has indicated a good high. I really think through the balance of the year. Not only is it a rejection of this longer-term buy signal I've been mentioning now, but it's also a valid sell signal just based on closing below 103.27. And with that, I would expect 89.95. The timing of this is a little tough. Volatility has certainly contracted in the recent weeks, so it could take 2 to 3 months to reach 89.95. It might be 2 to 3 weeks, depending on fundamental realities on the ground. I've got this high of the low is at 89.25. And I like to use that just from simple, just chart analysis. So we'll call it the 89 handle in reach within 2 to 3 months or sooner. If we close below 103.27 at the end of this week, 89 handle support, then able to contain selling through the balance of the year and quite possibly through winter trade itself. And that's all I'm going to say for this week's supplement to AgriTalk. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.